Welcome to Traders Corner. As always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, this week the show is going to be a bit more local because we spend quite a lot of time talking about international trades. But having said that, we are going to start off with the S&P 500, on which you have an option.
Yes, that's right. We always start the show just by having a quick look at the S&P 500 because it is the world's biggest equity index, and it's useful to look at because it does kind of give you a tone for the rest of the world's markets. So we look at it here. What's quite interesting to note is that the uptrend that began in November last year, which was when Donald Trump won the election, that uptrend remains intact. And you can see over the last couple of days, the market has consolidated and pulled back in quite a healthy fashion. It has retested that upward trend, and that level came in at about 23.55. And it reversed up off there, and you can see now it looks as if it's trying to push to the upside again. So overall, that bullish trend still does remain intact, and one can probably make an argument that we might see the S&P 500 try and make a go for the previous top again, potentially. As long as that upward trend remains intact, then I think we've got to stay bullish on the S&P 500. You mentioned the option structure which we have, and that I've overlaid the payoff profile of that option structure on the right of the graph over there. And basically it just shows you that above 23.50 we lose our premium of $140, but anything below 23.50 we start to make money. And we can make our maximum between 22.80 down to 21.80. So effectively I'm looking for the possibility of a pullback here in the S&P 500 before the 21st of March. Sorry, not 21st of March, the 21st of April, which is when this structure expires. So it gives us about another 5 weeks or so. If we see the market coming down below 23.50, then we would start to make money on this structure. If not, well, then we lose our premium, which is not a lot of money anyway. But it's nice to have this downside protection in place, especially given that the US market is very stretched now, and lots of people are calling for a pullback. But whether we see that or not between now and then remains to be seen. But we're positioned for it anyway.
Garth, coming back home, I know you want to have a look at the top 40 because it kind of ties into the trade that you're taking this week, because one of the shares that you're going to be trading in is a very big component of the top 40.
Yes, that's correct. So what I'm looking at here actually is the top 40 future. And the reason I'm bringing this up is because we've got the futures closeout coming up this week, Thursday. That's the 16th of March. So, and typically your March futures closeout is always quite a big closeout, although this year it doesn't look as if it's going to be all that exciting. In fact, it looks like it could be a bit of a damp squib. But anyway, it's nevertheless interesting to talk about it. The futures closeout, just for those who are not aware of what it is, all your futures contracts trade with a 3-month interval. So you've got expiries in March, June, September, and December. And effectively, those closeout dates are when the futures contracts need to be settled. In the case of a top 40 future like this, it's cash settled. So whatever cash profit or loss is incurred on a top 40 future by that point just gets settled in cash. Anyway, what I want to just look at here is the fact that this top 40 future has been trading in this downward channel since the middle of January. And you can see we've pulled back quite a long way. I mean, we got above 47,000 at the end of January, and we've been down below 44,000 now into March. So quite a meaningful pullback. You notice that there's positive divergence on the RSI at the bottom there, and that's where your RSI makes a higher low whilst your price makes a lower low. And that often is a forewarning of a change in trend about to come. So if that is the case, there's a possibility, I think, that we could start to see the market possibly pushing out above the top of this channel and maybe going to try and push a bit higher. Now, why I also want to just talk about this now is because of the fact that the futures closeout is coming up on Thursday, and also where's the optionality in this market. So I've indicated there the most pertinent option strike levels at this point at 45,000, and you can see the number of puts and calls that are there. And then down at the lower end, we've got at 44,000, there's quite a lot of open interest in puts and calls there. If the market were to push out above 45,000, then there's a possibility that these 5,800 puts would have probably been hedged on the way down. You might find there needs to be buying on the way through 45,000 in order to unwind any short hedges that might have been put in place against those written puts. So it's just something to bear in mind. But for now, I mean, we really suck somewhere between 44,000 and 45,000. I think in the immediate future, let's see what happens around that 45,000 area, because if it starts to push above there, then obviously there's optionality that could take it a bit higher. But also that would then begin to mark a break above this downward trend, which marks the top of the channel.
And maybe you would look to take advantage of that. I mean,
Yeah,
by
possibly.
trading the top 40
Yeah,
itself.
potentially, but we'll see. At this stage, not. This week, we're going to do a trade in Naspers, which we'll talk about next.
Yeah. Okay. Well, let's. Okay. So Naspers. I mean, I mentioned that it's a huge component of the top 40 index, and that is kind of one of the reasons why you're going to be trading in it. But maybe just from broadly, why has it caught your eye of late?
Yeah, what's caught my eye of late is that Naspers has really been going sideways for all of this year, just about. Since the early part of January, it's just been going along sideways. But you'll know that Tencent and Naspers have a very tight relationship. Tencent is the Chinese internet giant, and Naspers owns a 34% stake in Tencent. That component, that Tencent shareholding, is massive in the world of Naspers. It makes up around about 85% of Naspers' business. But interestingly, the valuation of the shares in Tencent that Naspers owns is actually worth more than what the entire market capitalization of Naspers is, which is very weird. So it effectively means that you're getting all the other businesses in Naspers for free. So
Yeah,
the likes
or
of
less than for free,
less than
because
free.
it's a drag,
Yeah,
isn't
you're
it?
getting correct. You're actually getting it at negative, which is extremely bizarre. But anyway, that's been like that for quite a long time, and for whatever strange reason that is. But if you look at this chart, you can see this overlays the share price of Tencent and Naspers and correlates the two. And it goes back to December last year. So not a long-term graph, but a relatively recent graph. The candlestick chart here is Tencent. That, as you can see, it's labeled there. And then this purple line here is the share price of Naspers.
Yeah.
Now, you can see that there's always been a fairly tight fit between the graphs, how they tend to track each other, which makes sense. You would expect that Naspers should track the Tencent share price very, very closely. Tencent, by the way, is listed in Hong Kong. What's happened recently, however, is that you've got this big disconnect that's opened up over the last month or so, where Tencent has significantly outperformed Naspers. And you can see Naspers lagging down the bottom here. And the obvious thing is to say, okay, well, yes, but the rand has been very strong during that time, and therefore that's part of the reason why Naspers has underperformed. But have a look. Look at when the rand was last at 13 Rand 20 to the dollar. It was late January, and we're back at 13 Rand 20 to the dollar now. So, you know, that doesn't explain this. In other words,
because in January you had a much closer correlation between Tencent
that's right.
and Naspers.
And so it shows, even with the currency movement, this relationship seems to have broken down, which is very unusual. Now, something I came across yesterday relates to where funds are starting to benchmark themselves against the Swix equal weighted index as opposed to the top 40 index. I'll get to that now. What I just want to show on this slide is that these are the top 6 weightings in the top 40 index. So you can see Naspers there, almost 18% of the weighting in the top 40 index. That's a massive weighting for one stock in the index. And I think fund managers have come to the realization that having one stock with such a heavy weighting, it's kind of dangerous in some ways, because you want to have a bit more of a diverse spread, a bit more equally weighted across the index. And what we've noticed, and I picked this up in a note yesterday, was that many fund managers, money managers, look as if they're starting to rather benchmark themselves against the Swix equally weighted top 40. In other words, you take all the 40 shares in the market and you weight them equally.
And Naspers doesn't have that position of dominance that it does in the top 40.
Correct. Then Naspers has the same amount of weight as any other stock. And it's a far more, I suppose it's like the name says, it's an equal weighting. But if that is the case, then what it would imply is that as these fund managers have to change their benchmark, they also have to adjust their portfolios in accordance. And typically, if they've been weighted according to the all-share index or according to the top 40, they would have this very large position in Naspers, which now needs to come down in size in order to match the benchmark. All right? And I think that goes a long way towards explaining why we're seeing Naspers underperforming Tencent to such a large extent. And I think it's a short-term anomaly. I don't think it's something that's going to stay with us forever. And if anything, I think the likelihood is that once this reweighting is done, you probably find suddenly Naspers needs to then catch up to where its Tencent sibling is in order to make some sort of parity.
Yeah. Yeah, I mean, and in fact, we had a question on Stockwatch last night asking about Naspers and Tencent and unbundling Tencent, in which case you would get a lot more maybe value in the share. So this is a trade, it's a long position that you're taking in Naspers.
Yes, it's a long position. I mean, in order for that correlation that I spoke about to come back into line, one of two things would need to happen. Either the share price of Tencent would need to fall, or the price of Naspers would need to rise. I'm taking the bet here that Naspers probably needs to rise in order to get back in line with where Tencent is trading. So here's the graph of Tencent, of Naspers itself, rather, here listed on the JSE where we trade it. And what you can see there is quite clearly the share price has basically been going sideways since the second week of January. It's in this channel. That channel that I've drawn in there effectively joins the closing prices at either the lows or the highs. And hence why you see a couple of candlestick spikes to the bottom and to the top there. But I'm really looking at the closing values here. I've taken a long position. I did this yesterday. I highlighted it for the subscribers on traderscorner.co.za. We went long at 2165 and 50 cents. I'm looking at a stop loss here below 2,100 Rand. In other words, all these lows that we saw in early March, if we start to take out those lows, then I'll have to stop out the trade and concede that I've got it wrong. But if it starts to break out to the upper end of this channel, then I think there's a possibility that it goes back up to 2,300 Rand. And that would pretty much put it back at parity with Tencent, where Tencent is trading currently. So I think it's a worthy trade. The risk to reward ratio on it is about 2 to 1. So it's viable, and I think it's worth a go.
Yeah. Well, and in greater mechanics, because you're using half of the portfolio is now structured towards South Africa, and this is probably we haven't actually traded in the portfolio recently.
We haven't done much on our South African portfolio, so this is the first bit of activity that we're going to see in a couple of weeks here. So I've gone long at 2165 and 50 cents. My stop loss is 2,100 Rand. The risk per share, therefore, is 65 Rand 50. My risk is 2,000 Rand, so I'm risking 2% of our South African trading capital. Remember, we've got 100,000 Rand in trading capital locally. 2% of that is 2,000 Rand, and that's what I'm willing to lose if this trade goes wrong. I take that 2,000 Rand capital risk and I divide it by 65 Rand 50, which is the risk per share. That gives me 30 CFDs that I can effectively trade. Doesn't sound like a lot, but when you're trading a share that's 2,165 Rand, it's a bit more meaningful. The target is 2,300 Rand, and therefore my risk to reward ratio on this trade is 1 to 2.05.
Guys, just longer term targets. If you happen to hit 2,300 Rand, and it looked as if Naspers was going to stay strong, because there are lots of longer term targets that sort of pitched Naspers at 3,000 Rand a share. Last night on Stockwatch we spoke about a possible unbundling of Tencent and how that might create massive value for Naspers shareholders. Yeah. Would you maybe look to be in this trade a bit more longer term than maybe just your target? Yeah,
potentially. Look, we've also got to take into consideration that we are in a fairly choppy type of market environment, and what I've often found is that if you don't take your profits quickly, sometimes they disappear quite quickly. So what I might do is take part of the profit at the target level and then maybe see if it's worthwhile to run the rest. And we can possibly look at some sort of a trailing stop loss type of strategy if it looks as if it's going to get the wind in its sails and continue higher.
Yeah, of course, this is all a big if.
Yeah, exactly. Lots of ifs, buts, and maybes.
Okay, guys, so given that I suppose this is one of the first trades essentially locally, besides MTN, what does that portfolio look like?
Well, so our local portfolio is 99,213 Rand, so we're just slightly on the wrong side of the ledger here, but minus 0.78%. It's not much. It's still early on in the year. And those are the trades we've done. You can see MTN Group, and then the Naspers is today's trade. And then quickly looking at our offshore portfolio, there's just a couple of the recent trades that we've done there. Nothing new here. Our UK portfolio is £9,960. So also slightly in the negative there, but not terribly so. Yeah. So I'm fairly comfortable with where we sit there at the moment.
Yeah. Okay, Garth, and then just to end off with a reminder that people can get a weekly alert on what's coming up.
Yes, that's right. If you'd like to subscribe to our free weekly email, go to traderscorner.co.za and you'll see that there's a link in the middle of the page there where you can click on the free weekly email link. It's quick to register, and then what we'll do is send you an email every Tuesday at lunchtime detailing on what is coming up on the show for that week.
Okay, great. We have to leave it there. Garth, thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.